on how the markets will be moving ahead, we're getting you Shiv Chanani, who is the Senior Fund Manager of Equity Baroda PNB Paribas Mutual Fund. Hi Shiv, thank you so much. Good afternoon to you and thank you for joining us.
Good
Shiv,
afternoon.
Shiv, right off the bat, this is the first day of the new financial year. In fact, we are coming out of a month of extremes. March was a month of extremes. We saw extreme lows and then a great recovery coming in the second half of the month. Today, of course, what's playing out really is the threat from the reciprocal tariff from Trump. But generally, now, is there some bit of a comfort as far as market valuations are concerned? Are you constructively more optimistic about the markets going ahead?
So yeah, I think as you rightly said, that it's a bit of a contrast right now, where we are seeing a bit of operating environment which is uncertain. I mean, of course, tomorrow being the so-called Liberation Day, we don't know really what's coming out of that. So yeah, there are a lot of uncertainties, but yeah, when we look at on the other side at the aggregate valuations, they are looking far more reasonable, let's say, compared to what they were looking somewhere around June, July, August of last year. Um, Having said that, I think aggregate valuations are always a little tricky because at the end of the day, it's a sum of a lot of things. Uh, we believe that in such kind of a situations where you still have a lot of uncertainties, markets generally tend to give a lot more weightage to the near-term earnings, and hence we believe that till the time we see a lot of this kind of uncertainty, markets are likely to be a lot more bottom-up, stock-specific market, where companies which have a better near-term earnings visibility are likely to do better than companies which have more of a story around long-term growth potentials and things like that.
Hi Shiv, good afternoon. This is Shrishti also joining in. But give us a sense that which sectors are you spotting right now where you find that the valuations are reasonable, and is it the time to actually put in, to go ahead and put fresh money into these sectors?
So again, I think this particular phase is unlikely to be very sector specific, and it is again going to be more stock specific. So what you are going to see is that within the same sectors itself, you are going to see different kind of behavior of companies from a stock performance perspective. Again, so companies which will have a better earnings growth, in even in the same sector, you can have companies which have a very different kind of a growth trajectory. Having said that, I think overall at this point of time we are a lot more constructive on the consumption as a space, because we believe that a lot of the benefits, the tax benefits that were announced in the budget, they are likely to come through the better part of this particular year, and that should help a lot of discretionary consumption. So that's one sector. Pharma and healthcare, it's particularly the domestic part, is going to be a steady growth part of it. And of course, you will have select capital goods and power utilities companies which will still deliver a decent amount of earnings growth for this year as well.
Right. So, Shiv, you mentioned that you're constructive on the consumption space, specifically the discretionary area of consumption. Tell us what are any specific names like whether it is the airways or the tourism sector, the hotel business. What are the sectors that you see value in within the discretionary consumption space?
So we have seen travel related space like the airlines and the hotels doing well already in the last 12 to 18 months. But we have seen some of the other segments which have sort of lagged behind, particularly if you look at something like a consumer durable as a space. And given the kind of tax breaks that we are talking about, I think those kind of tax breaks are very, very suitable for those kind of, small ticket items like a 20,000 to 30, 40,000 kind of ticket items. So we believe that, consumer durable space should be a little better placed. Of course, the travel as a space will continue to do well because I think it's kind of become more of a habit forming now. where people do like to go and travel out a lot more compared to, let's say, what it was in a pre-COVID kind of a era. So yeah, I think, most of the discretionary should do well during the most part of this year.
Right, so all eyes on that. But before we let you go, Shiv, also help us with your take on the IT space, because now we will be watching out for the earnings and the fine print there. So give us some sense that how do you look at the IT space right now? Because yes, of course, there has been recessionary concerns in the US markets, and that of course is weighing heavy. And the IT counter as a whole is seen to be under pressure. But is this a time to be a bit constructive?
Again, IT is a kind of a tricky space, I would say, because there are a lot of things which are happening in IT, and by definition in IT you will always see technology and the technology changes playing a large part of it. So you will have to kind of pick and choose within the IT sector itself. Companies which are going to adopt better to things like AI. And I don't mean when I say AI, in terms of AI implementation, I mean, the companies themselves adopting to the AI technology. Those are the companies which are likely to be better placed as compared to companies which will still continue to sort of do the business on the traditional manner, as well as the new segments like ER&D and all. I think those should continue to do well in the IT sector.
Right. Also, Shiv, talk to us about the financial space where the common consensus is, the valuation is ripe. They have seen underperformance in the last 3 years now, especially for PSU banking names. Also, the balance sheet looks strong, and especially if the rate cut comes on and the bond yields go up, that augurs well for PSU banking names. What is your take on the financial space then?
Financial space, again, I think you have to be a little bit more picky in terms of what you want to buy. And I think this is a common theme probably you will hear us talking about, which is the technology part of it. Again, within banking space, also technology is going to play a very important role. So you will have to pick and choose banks or other financial organizations, including NBFCs, which are going to invest aggressively on the technology part of it. I think that is going to be, again, the key differentiating factor when you are looking at, which are the ones which are going to give you that alpha.
All right, but Shiv, which are the sectors that you are very wary of right now, where the valuation comfort is definitely not in? And of course, there are a lot of sectors where, because of the Trump tariffs and what's been happening globally, there are concerns that the earnings in some of those export-oriented plays are seen to be under threat. Give us some sense that which are the sectors that you will just stay away from in this current market?
So largely, I think, one of the sectors that probably is going to be uh, a little more under pressure is probably going to be something like commodities, because at the end of the day, uh, what all of this means is that most likely you might have a bit of a slowdown from a global growth perspective. And in that kind of a situation, I think commodities is the one space which gets impacted the most. In terms of the first order impact that you look at, let's say, whether people talk about pharma, automobiles, or any of those particular sectors which have a so-called direct impact from tariff, I think we need to take a bit of a nuanced view out there, because at the end of the day, it's not about, the tariffs that are imposed only in India. It is all about the relative game at the end of the day. So, for example, in auto ancillary space, if, let's say, because of these tariffs, India becomes more competitive as compared to China, then you might actually find that the Indian auto anchors are actually getting benefited out of it. So I think we need to take a bit of a nuanced view around these tariffs rather than just taking a direct first order impact.
All right, Shiv, on that note, thank you so much for taking the time out and joining us today. We will let you go on that note, but with that, it's time for us to slip.
If you like this video, then like, share and subscribe to ET Now.